Hey everybody, welcome into the channel. Today's Saturday, it's June 13th, 2020, and I want to start the disclaimer on this video that I am not a licensed CPA or accountant, but I am going to give you my experience and advice. This should not be viewed as financial or legal advice. I cannot give that. So please take this video and get the advice from an actual CPA, but this will help you be prepared for hiring one. If you are new to taxes, if this is your first year filing business taxes or your first year in business and you have no idea what you're doing, please listen through this video, take notes, take down the list, and then go hire a CPA. It is worth your weight in gold. They can give you legal advice and help you file your taxes. With that said, the cutoff is now July 15th. You have until July 15th to file your 2019 federal taxes. The normal April 15th was pushed back May, June, July, 90 days. You have until July 15th to file them. If you owe the IRS, you will pay. If they owe you, they will send you in your money whenever you get it done and get it rolling. I don't know if they're on a delay right now. I think they're caught up by now. I know some people that filed their taxes last month and got them back in about a week and a half with their refund. With that said, also, if you have quarterly taxes from 2020, January, February, March, April, May, and June, first quarter and second quarter are both due by July 15th. First quarter was delayed. Second quarter is normally filed by July 15th, first quarter by April. Those have been delayed until July 15th, so you still have time to get those in without any penalties. If you are a business and you anticipate owing $1,000 or more, or you may end up owing $1,000 or more as a business to the IRS, you should be filing quarterly taxes, or you can be faced with a penalty, a percent of interest and fine for not filing them every quarter. If you are only filing your taxes once a year as a business, you are probably in violation of this. Again, get a CPA to help you. So what I want to help you with on this video, it's very important, is what should you have prepared for your CPA, or what do you need to file your taxes on your own through H&R Block or TurboTax or another software. It's very, very easy, guys. Please share this video in every reselling avenue that you can, your Facebook, your Instagram, your Twitter. If you own a group, if you're part of a group, people need to see this and realize that it's not that difficult. Again, get a CPA, but let's go over the list of what you need. And so when you file your taxes, people, this is federal taxes, not state sales tax, totally different subject. Federal income tax across the country. You are going to be asked if you are self-employed or if you have self-employment income in addition to maybe a W-2 or other things that you have income-wise, you're going to be asked for a list of items. And I have that list right here. This is a small list. For each and every person, it is different, but most of these will apply to most of you. If you're eBay, Amazon, Poshmark, Etsy, Shopify, it doesn't matter. It is all the same to a point. And so I want to go down this list. The first thing you're going to be asked for is a box that says your total gross sales. That is everything you have received, period. So let's just say, for example, you're an eBay seller and you have sold one item for $20 and you charged the buyer $5 shipping. You received $25. Now also you're receiving sales tax. Let's say it was 90 cents. You received $25.90. That was put into your account. All the IRS can see is exactly the amount that was put into your account in the event of an audit. They don't know that that was the item and the shipping. They just know you got $25, right? They don't know how you broke it up, 25 free shipping or 20 plus 5 or 15 plus 10. They don't care. What was the total transaction? $25. If there's sales tax, that's going to go on it as well because we'll pull out the sales tax that eBay took later. So total amount, that's all together. On Poshmark, you do not receive the $7 shipping, right? So your price is $20 for an item, it's $20. Now you're going to say, well, Posh takes their 20%. They do, but your 20% that's taken out right away is part of your sale. You have to tell the IRS that you made $20 on Poshmark and that you had a $4 fee. So you don't tell the IRS that you sold $16. That's not correct. Your actual sales report on Poshmark is going to show a $20 sale with a $4 fee. And this is why you need a spreadsheet showing this. $20 for, $20 for, 15 to, whatever it is, all the way down. Or you need QuickBooks or GoDaddy, which I think is easier because they categorize it. So, number one, total sales price. Don't worry about the fees right now. Just total up everything that you were paid, complete total out the door that actually was your sale price. Okay, that's number one. Gross sales. That's why they call it gross sales. Number two, they're going to ask you if you have inventory, cost of goods sold. Let's say that you bought 10 t-shirts for $2 a piece. You spent $20 and you sold 5 of them this year, and you still have 5 of them on your shelf still for sale. They haven't sold yet. Your cost of goods sold is $10. You sold 5 of them that cost you $2 each. That's the number you give the IRS for your cost of goods sold. Later, they will ask you if you have any inventory left moving forward into the following year. Yes, the answer is in 2019, I sold $10 cost of goods sold. And when I started 2020, I had those 5 t-shirts left. That was $10 in inventory. Simple as that. How much did the stuff that you sold cost? And how much is the stuff that you have left cost? That's all they need to know. There is another way to do it. You can cost average. You can also zero inventory, which means putting all the cost into what you sold, and everything that's left has a zero cost. And when you sell that stuff, it'll be a higher profit. A little more confusing. A lot of you like to track the items item by item so you know the exact amount, and that's perfectly fine. If you're selling thousands of items, you may want to consider the other accounting method for inventory. It's up to you. Talk to a CPA about that. That is the second number you need, cost of goods sold. So make a line and write all this down of the number that you will need, right? So gross sales, question mark, cost of goods sold, question mark, and start filling these in. And when you go to a CPA or you go on the online software, when it asks you this question, after you find these numbers, when you get done this video, you'll have these numbers down in a row. You can just plug them in. It's really easy, right? Number 3 is going to be the cost of any dues and subscriptions. They call this dues and subscriptions or fees and subscriptions. This means any fees or dues that you paid a website, i.e. eBay fees, Poshmark fees, Etsy fees, PayPal fees. So you have to go back and get the total that you paid eBay for all your fees. Final value fee, promoted listing fee, bold title fee, all the fees that you paid eBay. And you're gonna need that total for what you paid the store. So if you've got a premium store for $60 a month, I think it's like $59.95, that would be another $720. You're gonna total all those eBay fees up, and you're gonna find out that you gave eBay $10,000. Then you're gonna go total up Poshmark, and you gave them $2,000, and you gave Etsy, and you're gonna get all these totals for these websites, and then you're gonna combine it into one number. If you pay for a website, if you have your own website, let's say you have www.rockstarflipper.com, and you pay $20 a month for that website, that's part of that as well. That's a due and subscription. That's a fee that you pay. So every single thing, if you have your own email server, all that stuff, anything dues and fees, if you pay to be on an email list or you pay for whatever it is, that counts as that. Not advertising, that's different. Advertising is different. Just websites, fees, and dues. Those all go into one. Your PayPal fees count, your Poshmark, your Etsy, your eBay, all of that, one fee. Get all the numbers for the websites, total them all up, make a little column for each one, and then put them together. Boom. Okay, your next one is going to be your materials. So materials are defined as anything that you use up within 12 months, anything that goes away within 12 months. So printer paper, ink, toner, sticky labels, whiteout, bottles of whiteout, whatever it is, stuff that you use up that you don't keep. Things like, what else would it be? Like ink pens, I believe, are included in that. Things that run out, stuff like that. All that sort of stuff that runs out that you do not keep. That's number 1. That's materials there. The second part of this is called equipment. Equipment are things that you invest in, that you use, that you intend to keep longer than 12 months. Even if they break or something, they're intended to be used longer. My iPad is a business investment. Now I've had this for like a year and a half, 2 years, so I'm not claiming it this year. I claimed it last year on 2018's. This is something that I paid, $1,300 or $1,400. This is an equipment purchase. I use it for business every day. I bought it for business. It is not a personally used item. Do not claim your television as an equipment. It is not a business use. If you buy a TV that goes in an office space and it's on the conference room wall and you use it for PowerPoint presentations during conference meetings, that could be considered a TV that was bought for business purposes, equipment, and it's used up. Otherwise, it's hanging in your den, not a good idea. Also, furniture, equipment. If you bought an office chair, if you bought an office desk, if you bought a light kit, those are examples of more equipment that are used every day that are kept. A new camera, a photographer might have bought a new camera, a new cell phone. Those are all things that you can deduct if they're used for business. Always used for business. So equipment. Next is a little bit weird. It's materials that are used in production or the presentation of the item or the sale of the item. So a lot of you this won't apply to, but let's say that you make your own clothes. You go to the store and you buy material and thread and you make your own clothes. That has its own category for the IRS. They want to know how much thread, material, cotton did you buy to make your product. If you are a photographer and you print out your photos and then frame them for a customer, the photo paper and the frame would be materials used to produce the product, right? So all of that. If you are a candy maker and you're buying chocolate and sugar and milk, that's all materials used to produce your product. And so that would be its own column as well. Many of you probably aren't going to apply to that. If you buy a button to replace a button on a shirt, that would fall in that category as well. Okay, moving on next is a lot of you will use your car to travel to stores and drive back and forth. So there are several deductions and expenses related to the driving back and forth and use of your vehicle. So obviously the miles, you should be tracking miles. Mile IQ is a great free app that you can use. You can manually track it. I don't recommend that, but essentially anytime that you go to a store that you are going for business use or any kind of travel to business use, garage sales in the morning. If you wake up on Saturday and you drive around to garage sales and you drive 30 miles, that's 30 miles of actual business miles. If you drive to all the garage sales and then when you're done, you and your husband go and don't go home and you drive to a movie, those miles don't count, only the garage sale miles. So always track that. Mile IQ is great because you can turn it on and turn it off while you're driving. It'll track the miles, and then when you start going to the ice cream shop, you turn it off, and then when you get home, you can turn it back on for your next trip. So Mile IQ, recommend that. There's other apps that do it as well. Somebody can comment below if they have other recommendations. I don't work for them, don't get paid for them, whatever. Okay, gas receipts and maintenance. So there's a way to claim your car itemized or standard. It's gonna depend on the price and what you pay and how much, but you should keep gas receipts. If you're driving those miles, you can divide it out to figure out how many gallons of gas you used. And if you have any maintenance, if you have to replace normal wear and tear, tires, brakes, something like that, you can deduct that. It is deductible if your car is a business use car. So something else to think about keeping receipts on. Okay, the next one is your home office. Here it's your house. If you have a dedicated room, you cannot use it for anything but work. It has to be a dedicated room. We have a spare bedroom. That is an office that is only used for business. We do not go in there except for inventory. We have a scale in there. We have a printer. We have shipping stuff. It's closed. Nobody ever goes in there except when we're working. That is dedicated office space, or if you have an add-on to your garage, you can't claim the garage if it's being used for both. It doesn't count. You want to know the square footage of that room. So take a day and whatever you remember, go take a tape measure and measure the room that's dedicated and get the square footage and write it down. The IRS will just ask you what that square footage is and they will calculate the deduction for you. So that's pretty easy. Your cell phone and internet bill. So this one's a little complicated and some people get confused on this, but here's the easiest way for me to remember it. If you have a dedicated phone line, either cell phone or landline that is only used for the business, like if you have an office and you put an office phone in, that's deductible because it's a business line. If you are using your cell phone, which I'm on with you guys right now, it is obvious to the IRS that I use this phone for personal use and business use, right? So I cannot claim this phone as a business use phone as an independent line because I use it for personal use also. But the IRS is okay with and will allow, and I have confirmed this with CPAs, accountants, and workers, if you claim a portion of your cell phone and internet bill. I use my phone for like 98% business, right? So I'm not gonna argue over did you use it for 75% or 80% or 82 or 50. I just claim 50. I claim half right down the middle. If my internet bill is $100 a month, I claim 50 a month. So my total claim for the year would be $600. Same with the cell phone bill. If it's $100 a month, I claim 50. my portion that I'm willing to deduct for the IRS is $600. If they decide to audit you and you tell them, here's my only phone, we don't have a landline, we don't have any other phones, it's only my cell phone, it's definitely business versus personal, I claimed half of it. You give them the receipt for your cell phone bill. I pay the cell phone bill out of my business account. So boom, there you go. So that's cell phone and internet. That goes along with the home office. If you have dedicated lines, then it's much easier for you. But who has dedicated lines? I don't have house phone. I don't intend on getting one. Is what it is. Okay, so other things that you should anticipate having the numbers ready for to claim. Again, everybody is different. If you own a home, you pay mortgage interest on your mortgage payment. Mortgage interest is deductible. If you are married, filing jointly, it'll be on there one time. Me and Caitlin, my fiance, not married, so we are both on this house as co-owners. I claim it, she does not, because her income is much less than mine, and so I need the more deductions. So only claim the mortgage interest once. Your health insurance. If you pay health insurance out of your own pocket, like I do, it's actually cheaper and better than the government plans. You should know the total that you spent. So if your payment is $200 a month, $2,400 a year, the government will ask you, did you buy health insurance on your own, and how much did you spend? That is a deduction. You are providing your own health insurance. If you have a government plan, the healthcare marketplace or Obamacare, or whatever is still available, I don't know. That is an option as well that you can select. It'll ask you, you had health insurance, did you provide it yourself or did the government provide it? And you're gonna select the government provided, and every year the government, I think, sends you paperwork on your health insurance. You need to keep that, and you will fill in those numbers. It gives you some numbers and you'll fill it out. I've never had government, so I'm not 100% sure. I've seen it on some videos. Okay, so other deductions, expenses to consider. There is definitely deductions if you have children. You should definitely know about those. It's gonna ask you how many children, are they dependent? If you are head of household, Google that. It's a little hard to explain, but it's a little deduction. Also, if you pay bank fees or interest fees, if you have a business account and your bank charges you $20 a month for the business account, that's $240 in bank fees, that can be deductible. Interest on business credit cards. Let's say you use a credit card and you're swiping away and you're buying inventory and you end up spending a couple $100 a month on interest because you're paying it down and then charging it up, paying it down, charging it up, and you have a little balances. Deductible interest on credit cards that are business use only, those are deductible as well. So keep that in mind. More fees. Anything, if you have a business loan that charges you interest. If you took a PayPal working capital loan and there was a fee on it, that can be deductible as well. So all of these things are expenses and deductions that you should or probably have most of them for a reseller. So a couple more that I don't want to leave out that are important. Travel and lodging. If you flew to eBay Open, you can claim the plane tickets for travel and the hotel for lodging. Also, training. If you paid me for any kind of training courses or anybody else, if you paid for a ticket to eBay Open to their workshops, that's a training fee. If you took an online course or a mastermind, or maybe you donated money, donations sometimes can be tax deductible as well, depending what you donated on. You always hear about rich people, really wealthy people donating millions of dollars because it's a write-off, and so that is correct. There are taxable write-offs for donations, so something else to track. Again, the training materials for anything that you took, training related to your business. If you're a reseller and you took a training course on how to eat better, that's not really related to your business, and that probably wouldn't be deductible. But if you took a training course on how to be a better shipper, that could be deductible because it's going to help your business directly. And so that is pretty much going to wrap it up for the list of deductions and expenses. Again, there are hundreds of other deductions and expenses. You know, people that own rental properties, people that pay for education or have student loans or have college fees. There's all kinds of other expenses. Ask your CPA or Google it or YouTube it, get advice, but always ask a CPA. This is just a list that I'm giving you that I claim most of, pretty much all of them, and that many, many people I do business with or that are in this business and that use the CPAs I use, they also claim a lot of this, or have many of these expenses. They're just very common for our industry anyways. Other industries, they might be different. Stock traders are not gonna have shipping labels, right? Something like that. Oh, that's an expense too. Yeah, every time you buy a shipping label, I think I skipped right over that. Every time you buy a shipping label, you need to have that total of how much you paid for the label. Even if you charge the buyer, you are the one buying the label. That's deductible. Keep track of all the shipping labels that you pay for. That's its own expense as well. So I think I covered it all. If there's questions, comments, concerns, put it down below. I ask that all of you share this with anybody. Tax questions come up all the time, and they're coming up right now because everyone knows the deadline is coming. So please share this in groups, Instagram, Facebook. That means more to me than any amount of thumbs up, likes, or comments. But if you do have questions, put it down below and I'll try to answer as many as I can. Also, I will link Mark too. He is Not Your Dad's CPA. I'll put his link. He has an entire Reseller Tax Academy available for you guys. He will help you get your taxes straight. I got a few reviews. If you took Mark's course or you had Mark help you file your taxes, if you could leave a comment down below about how well Mark helped you, that would be awesome as well. And everything else I will check in on for you guys as usual. So thank you for watching. I appreciate it. Enjoy your weekend. Have a wonderful time. I'll get this video up for you ASAP. Also, let me know how the audio sounds on this because I have my phone recording inside of a soundproof box. I have it sitting in a box. So I just kind of want to see if the audio sounds a little different right now. If it sounds terrible, I won't do it again. If it sounds okay, then I'll do it again. All right. Thank you guys. Thumbs up. Make sure you subscribe to the channel. I have more great videos coming out the rest of this weekend. And I'll see you guys then.